Harry here with the Rant on June 28th. I think we are finally, begrudgingly seeing the top of our lifetime. Something that's going to go down like September 1929, okay? This second bubble has been totally artificial. The first time in history that a major bubble, and now this is the longest bubble as well, has been generated entirely with artificial stimulus and in a period in the economy when otherwise we would have been in like a Great Depression period like 1930 to 42. That's what 2008 to 2022 to 23, I was predicting that while the boom was building, that we would have a major bubble top and we would have a deflationary downturn because depressions follow major financial asset bubbles, and this one was global and an everything bubble, as I've said so many times. But this has been fought, and finally, it looks like after the overreaction to COVID, and the 525 basis point rate hike, finally that the markets look toppy here and are about to turn down. And again, that downturn should be a lot sharper, much more like 2022, with this time more follow through to follow, okay? Now, we're also, why I also think this looks like a great place to see this historic top. You've already had the Dow just recently hit 40,000 for the first time, okay? And it's backed off of that a little bit, okay? The NASDAQ 100, literally as I'm speaking, just before I came to record this, was 3 points away from 20,000, another historic target that we will not see for decades, if even way longer than that. And the NASDAQ had already just broke 18,000 recently. So these are nice round targets. And of course, I've been harping on divergence in everything, but the big one, the NASDAQ and S&P making new highs, the Russell 2000 not even coming close. That's a huge divergence that's been building for almost 3 months now. And you've got the crypto things, Ether and everybody else not following Bitcoin's new high, all-time high. Everything is saying major top here. Now, I know how history's going to look at this. When we see this crash, and again, 40% will be the first whack into early 2025, if I'm right here, and then followed, and then we end up down 8. And now I've even had to revise my targets now with the higher highs here recently. 87% or a little more down on the S&P 500. 93% or a bit more down on the NASDAQ. Again, crash is big or larger than the 29 to 32, 89% crash. History's going to say, oh, it was the overreact. It was COVID and the overreaction to it. And that's only partially true. Because it is true. Out of the $27 trillion combined, fiscal at $8 trillion and monetary at $19 trillion, that combined stimulus since 2008, over about 14 and a half years into 23 before they started to taper off, that's never happened before. Massive stimulus. But only 11 trillion of that came after COVID, a few years after COVID. So this real story is, for the first time in history, central banks, starting with Mario Draghi, who told people in the 2008-9 crash, if you want to keep shorting this market, you investors and short sellers, I'm going to blow you out of the water. And he did, and then Ben Bernanke did, that combined stimulus and stuff. That is when something changed, and that's when we had the first time when central banks say, I'm sorry, folks, we've decided we're not going to have recessions anymore. Recessions, we don't like recessions. We see recessions as the enemy, and we will print as much money as it takes to turn around a recession and keep future recessions from happening. And again, my criticism, this is a grave in a deep misunderstanding of how free market capitalism, the number one thing along with democracy, but more so free market capitalism that has made us rich since the late 1700s and really took off since the late 1800s, okay? So this is something I'm hoping here, frankly, that this crash is as hard and steep as I'm predicting, because we need to learn a lesson here. Central banks need to be shown that it does not pay to fight a bubble or pass bubble burst by building a bigger bubble. And that's exactly what they did. They don't want a recession so bad, they were willing to create a longer and bigger bubble than the first one that crashed in 2000, 2002 with the tech bubble crash, and then crashed a second time when the generational top came in spending, which I predicted decades before it happened, 2008 and 9 crash, okay? So we don't need to do this again, and I hope that's what happens, is that we realize the best way not to have a huge deflationary, horrible crash is to not let booms get overladen with debts, and which also always fund financial asset bubbles. This will be the second big financial asset bubble burst. It will be far more global, far bigger, all sectors, real estate, everything. And again, this only happens once or even more than once, I mean, farther than once in a lifetime, every 90 to 94 years on the biggest cycle I see financially. And that is what I call the super bubble cycle. So again, this has been pushed out longer. There are signs, especially reaching these milestone tops, signs that, of course, also the 1.5 year lag, typical on the massive 525 basis points, hits the worst late this year, early next year. This is the time to see this crash start. And once it does, I think it's going to gain so much momentum. It's going to be hard for the central banks to stop it. That's still the wild card here. They will react at some point and start printing money again, but that the earliest anybody sees that is September. And I think if we're crashing by then, people are going to start to realize, oh my gosh, this doesn't work. I mean, how could the economy be crashing again and stocks crashing again after $27 trillion of stimulus? Oh, you know, yeah. So again, all we can do is be safe, be out of almost all financial assets, and wait for the last great and historic buy opportunity of a lifetime in all financial assets. And of course, I'm going to be watching this downturn and advising you that, but it's probably at least 2 years away, probably well into 2026 and maybe longer. It's really hard to see how long this crisis is going to be, because I can't even compare the magnitude of this bubble with past bubbles in history. So I will keep you updated.